Hi, welcome back, folks. Just a quick little review on NASDAQ futures. This is the September delivery contract for 2023. All right, so this morning, overnight in the London session, we had a little bit of a rejection on the low of Friday. So using this down close candle as a bullish order block, we traded up into this premium wick. So consequent encroachment is midpoint of that right there. I'll let you figure that out on your own using your fib. And we had the market trade up on Monday, and then this is the new day. It starts at 6 p.m. That's what we're seeing here. 4-hour chart. Okay, so we have relative equal highs here. So there's buy side liquidity resting right above that. Market again traded into that daily bullish order block. We had a shift in market structure. We'll look at that on lower time frames. And then rallied aggressively into the close of today. On the hourly chart, you can see there is a SIBI. This is a sell side imbalance, buy side inefficiency. So after 4 o'clock, we saw market trade up into that. We're going to take a lot of details in this area in here after this shift in market structure. So this high here, once we went lower, it lower, low, sell side taken, leaving buy side here, then buy side taken, but extremely aggressive through these highs. So trading back down, not taking out that low. More specifically, we're going to look at that wick as well, and then all of the market structure in here. 15-minute time frame, here you can see that buy side liquidity here. Now, these two levels are the 60-minute or hourly sell side imbalance, buy side inefficiency, respective high and low. It doesn't look like a SIBI in here because we have multiple candles. But let me go back up one more time up into the hourly chart so you can get your frame of reference. These two levels here are anchored on the hourly chart right here. Okay, so this candle's low, this candle's high. They're not annotated here, but the same respective levels are going to be here. So that's this 60-minute or hourly SIBI low, 60-minute or hourly SIBI high. Now this time frame here is a 15-minute time frame, but more specifically, look down here in the lower right-hand corner, RTH, that's regular trading hours. So we had sell side below here, we traded down below that, and then we had an aggressive shift above these highs here, and then leaving a gap. So that gap there, we're going to treat that as a breakaway gap, and the breakaway gap high and breakaway gap respective low. And in this shaded area here, okay, see that yellow box? This is Friday, August 11th, 2023, opening range gap. So you can only see these with the regular trading hours toggled on your trading view. So from here to here, these two respective candles, we traded around in here on Friday, but left that portion open. These gaps will be referred to by the algorithm. They don't just fill and forget. It's traded all the way up into it here. And then look at the bodies respecting the high in here, and then one more top right there in the afternoon session, and then aggressively runs for the relative equal highs and that draw on liquidity, the 60-minute SIBI. This inefficiency is this candle's high, this candle's low, which is a BISI. It's the opposite of what this was on the 60-minute chart, but now on a 15-minute time frame, this exists on both regular trading hours and electronic trading hours. So these levels here will be seen and they'll be visible when we look at the next slide. Again, same 60-minute SIBI, high and low respectively. 9:30 Friday, that starts the opening range gap, but we don't see a gap there, do we? Why? Because we're looking at electronic trading hours. Right down here, ETH. Okay, so electronic trading hours, you have to refer to the gap on the RTH, regular trading hours. Once you annotate them, you want to toggle back to electronic trading hours and have your annotation stressed on your chart. Relative equal lows, sell side liquidity, We pierce through that, and then we have a wick. Okay, so this is a discount wick. Midpoint of that is consequent encroachment. You can see we hit that beautifully here at the opening at 9:30. Did not take out the low. We had a shift in market structure here. Very, very energetic price run. It drops down, looks like a bull flag. Retail wanted that to act as a bull flag. Imbalance. Rejection block, lowest down close price. Trades through it. Consequent encroachment of the discount wick here. Trusting that this low should not be taken or pierced because of shift in market structure here. The market trades aggressively higher. Above what? A short-term high right there on the 15-minute time frame. We open, trade down to this candle's high, which is an order block. Buy side here, and the inefficiency as well. Here's that buy side imbalance, sell side inefficiency, respective high and low. And that breakaway gap that we mentioned here on the regular trading hours can be seen also on electronic trading hours. And eventually after 4 o'clock, we see it trade up into that hourly CIBI. 5-minute candlestick chart. We're looking at a little bit more detail here. We have the low, relative equal low. So below that's what? Sell side liquidity. We drop down there, then we rally back above. That wick that was seen on the 15-minute time frame, it doesn't show it here. But look at the bodies respecting it. Yeah. And then it hits it here at 9:30. At the open, we trade through. Short-term shift in market structure there. Much like we saw it here on a higher time frame, we're seeing it now on a lower time frame there. And then we drop down into the bullish order block. This is also immediate rebalance on the 15-minute time frame. And then we rally up. Now, I did make a mistake today while I was tweeting. If you go and look at my tweets, I didn't do too many of them today, but I mentioned that there was a fair value gap on the 2-minute chart. And that's not what I was looking at. I was looking at a 5-minute chart. And this is the fair value gap I mentioned that price was struggling with initially and offering short-term resistance. And we traded back down into this down close candle. Then price rallied through, came back down and touched the top of that fair value gap and reached for the liquidity that I was mentioning prior to all that anyway. 15,138, which was the buy side in the afternoon on Friday. I'm looking at Friday's trading and not so much emphasis on Sunday. So if you're using Sunday's highs here for buy side, and that's fine, there's nothing wrong with that. But I'm taking it back to Friday's price trading in the afternoon. And then we had the relative equal highs here on Monday morning going around the 7 o'clock hour. So we ended up trading off of the 5-minute fair value gap. And if you look at a 2-minute chart, you'll see there's no fair value gap there to draw on. So I didn't bother to take a look at the tweets. I'm sure some of you probably already corrected me or were trying to correct me. But I was doing other things today while I was reading the tape. The market rallies, creates the high of the breakaway gap here, rips higher, takes the 15,167 buy side. And then because my attention would be elsewhere, I know some of you like to jump on board when I'm pointing things out. I just said make sure that you're content there and move to the sidelines. Eventually took out the buy side here. I made no mention of this, by the way, but it's pretty obvious, when we're looking at things like this. This is where buy side would be. And above that would be what? The inefficiency on the 60-minute chart. So the level up here is the hourly CIBI high. This level here is the hourly CIBI low. And wasn't traded until we got to after the day session ended. And again, here's the immediate rebalance here. Just a wonderful signature. And I've been getting a lot of feedback from this one here from everyone now utilizing it. And if you have your bias correct, if you know that the draw on liquidity is likely above or below the marketplace and you're trading at a specific time of day that would be indicative of volatility coming in, this is one of the strongest, absolutely strongest signatures that I look for when price is giving me that. I know that the algorithm will begin to spool price aggressively in the direction I'm looking for. Okay, 5-minute chart zoomed in a little bit here. So here is the 15-minute candlestick that creates that discount wick. The midpoint level here, you see it drops down into that. I'm doing tight for the 9:30 opening. We drop down, and if I was just showing you this time frame here, you would see this and think, why didn't you use this candlestick, ICT? And that's generally what has happened in the past, because I'm looking at things on a time frame to talk about that at the time in my teachings, even old videos. One of the things that creep in is you'll say, why is he pointing at that candlestick and why is it not the lowest down close candle? It's because I'm taking your attention to a specific time frame, and because the annotation may be anchored to a higher time frame, that may have caused confusion in the past. Okay, so it's not that I'm picking different candlesticks or trying to hide something from you. It's just a matter of me moving from one higher time frame down to a lower time frame, and my annotations anchored to the higher time frame. So it's going to look a little bit different, as you probably have already been paying attention and noticing. When we look through that continuum of price delivery from the higher time frame to the lower time frame, you want to have the anchored PD arrays on the higher time frame, but you're using the lower time frames to refine in terms of accuracy and such. But here's that 5-minute fair value gap here. We trade up and through it, find some support there, and then we rally up, take the buy side at 15,167. Now notice that we have this inefficiency here on the 5-minute chart, but it's part of the larger buy side and balance sell side inefficiency, high and low, that is the 15-minute time frame. But notice there's a small little gap there at the bottom end of the 15-minute buy side and balance sell side inefficiency. Go back and rewind the video back and look at the 15-minute time frame. These two blue lines here are anchored on the 15-minute time frame. But just to drop down to the low of it, it's also doing so because there's a small little portion of inefficiency right there between this candlestick's high and this candlestick's low. If this didn't occur, and say this candle was trading all the way down to that level there already, then I would only look for this little area here and this drop down, and that would be sufficient enough for me to look for a long entry to get in sync with the afternoon using the lunch macro. So we actually see the bodies respecting, again, the buy side and balance sell side efficiency on the 15-minute time frame. We have a little bit of a wick in here, but it trades down into what? The Friday, August 11th opening range gap. So it's treating it now as support. So these levels are like creating an X-ray view in price action. These are the things that the algorithm is looking at that most people are not looking at. Now you might think, oh, well, everybody knows about the gap, ICT. Come on, you act like you invented a gap. No, I invented the logic that I'm teaching you with that the algorithm will follow. Okay, that's authorship. So when the market trades down and finds the top of that gap, it's going to treat it and refer back to it and recapitalize. Allow smart money to reclaim bullish entries on that same premise there. Okay, so there's no support or resistance idea over here. It's the gap in itself that it's trading down into. And then we touch one more time the buy side and balance sell side efficiency high, and then off to the races we go. Immediate rebalance on the 15-minute time frame, and then zips up into aftermarket hours into the SIBI level here. Okay, in the 1-minute chart, you can see we drop down into, I'm going to take your attention over to this little area right here. So you can see that we had this small little gap right there, and the low that was not going to be taken out because it's a 15-minute wick that trades down to take out the sell side. So this drop down in here, go back and watch the beginning of the video. It drops down, takes the sell side there, and then it leaves this gap. So we drop down into that perfectly. And then we have market rally up, shift in market structure there, bullish order block, and takes off. And then this little gap right here, I refer to that also real time and after. This is the key, okay? After I mentioned that the 15,138 and 15,167 buy side. So if I'm pointing that out and I'm saying, watch this fair value gap, your mind should immediately jump to, okay, he's pointing out this fair value gap with 138 and 167 buy side prior to that fair value gap. So how would we use that? It's an inversion fair value gap. And we'll zoom in here in a couple minutes. And the market rallies up, creating relative equal highs, going into the lunch hour, dropping down, taking sell side, repricing to the low of the buy side and bounce, sell side inefficiency. Here's the buy side and bounce, sell side inefficiency low, and the BISI high. It's these blue levels are. Trades down to it here. That's a perfect area to go long and run up into the buy side. You can see that's in fact what we got here. And then it rallies up, stops short of the highs here, so it creates a triple top. That is absolutely poison. Retail traders will see that and say, well, that's really strong resistance. And it drops back down into the BISI high, buy side and bounce, sell side efficiency high, and then touches again that old Friday opening range gap high. Touches it one more time, gives it a kiss goodbye, and then off to the races we go. Immediate rebalance there, and then sends it higher into the last hour of trading. Here's the tweet. I told you at 9:57 New York local time. Look at the 1 minute. That's where we're at, 1 minute chart here. 1 minute NASDAQ, 947 candle. Note that fair value gap. That's this candle right here. Okay, and I'm telling you, look at it right there. After I pointed out 15,167 buy side. So the market draws up into there. We find some support at that 5 minute fair value gap. And that's my fault for miscalling the 5 minute, the 2 minute chart. I apologize for that. But nonetheless, even if you take that out, the context is we were going up to 15,167. I mentioned if we failed to get to these levels, all the focus would go down to 15,020. But because we got that, 15,020 is not likely. So it's going to continuously draw higher. And we saw that happen here. All right, and looking at the last portion of trading today, here's the 2 o'clock to 3 o'clock silver bullet. The entry is right here. And after that rally up, did it take out the buy side yet? No. So this fair value gap can be what? Reclaimed. It can trade back down into it again. So it's trading back down into it, finding some support, rallies once more. Creates a fair value gap there. Institutional order flow entry true, and volume imbalance between these two candles' bodies. Rallies in the last portion of the last hour of trading in the New York session, and the market on close macro that sends price careening into the buy side liquidity here. And then we have an immediate rebalance with an order block and a fair value gap. Really, really strong. Really, really strong. And it sends it higher, aiming for that hourly SIBI low, which, you know, did after 4 o'clock trading today. All right, folks. Hopefully you enjoyed that. If you found it insightful, give me a thumbs up. Until talk to you tomorrow. Be safe.